Yeah, that's what she said. Okay, cool. So we're about to go ahead and get it shaking with the bacon. Okay, let me go ahead and log into the harmonic scan, man. You feel me? And then we go see if we got anything on that thing. If we don't, that's perfectly fine because we go find our own setups regardless of help or not having help. So first off, if you guys are not utilizing the products, I don't know what you're doing, bro. Now, unfortunately, today I don't think there's going to be. No, I know for a fact there's not going to be a go live session following this call. So normally, what I've been preaching is these calls literally lead up to two of the educators that I learned how to be able to get my trading style from, which is going to be John Dollar and Rob Kumar. So if you guys are not tapping into, right, the Pro Pack, I really don't know what you're doing. So let's go ahead and reference that real quick because we gotta leverage the products. You feel me? So who am I talking about? I'm talking about these two gentlemen, right? Don't quote me on it. I know that they're overseas. I don't know if they're London or United Kingdom. It's one of them joints, okay? John Dollar, Rob Kumar, okay? They're gonna go live Tuesday, Wednesday, Thursday, okay? At 3 a.m. Eastern, which is 2 a.m. Central. Normally these calls immediately follow my call, but obviously it is Friday, so they're not going to go live. So you guys might want to go live and maybe go watch some of the recorded sessions and see what them boys got going on. Okay. So without any further ado, let's see if we got anything on the harmonic scanner that I might like. If not really tripping like Scottie Pippen. Man, I'm you know what I'm saying? I'm rhyming all the time and up in here, man. I don't even know where the skills be coming from sometimes. It's just off the top of the dome. So I don't necessarily see anything on the harmonic scanner, which is okay. Okay, because we already got some setups, and we're gonna be talking about those setups, and we're basically gonna go over what happened this week because I ain't gonna lie, like the pip count, the risk to reward gain, the percentage gain this week, it was absolutely amazing, right? Needless to say. So we ain't got nothing on the harmonic scanner, so we're gonna go ahead and get that thing up out of there. The DeLorean actually recently called out something. Let's see what they got. All right. Refresh. Let's see. I done mess around and talk myself into exhaustion. I'm a little tired from doing all that damn talking. I ain't gonna lie to you, but you got to keep the energy high. You feel me? All right. So they don't have anything I'm necessarily interested in or fond of. Come on, laptop. Don't be slow for your boy. We got company now. Come on, act right. Act right. All right. So GBP NZD. I don't like that. But we got gold. Yeah, I don't like that. 80 cat. Yeah, I wasn't a fan of that. I passed that up whenever I saw that. Let me go look at that 80 cat. What time frame is that on? That's only 30 minutes. We ain't taking a DeLorean in a minute. I've become extreme for anybody that trades a DeLorean strategy. I've gotten to a point where I've become extremely picky with the DeLoreans that I take. Just because I know exactly what kind of setups I want to take, so I can be picky. Let's see what that TDI looking like. I mean, it's not a bad trade, but I'm personally gonna pass it up. It's Friday, so I don't necessarily just be trying to jump into nothing necessarily. And the other thing too, me personally, so this is like a little gem for people that trade the strategy. I personally don't like when the EMA is like this. Like I want this EMA to actually be, if it's an EMA that's placed like this, I want it to actually be cutting through both candles. I don't really like how like this EMA is like slightly below the green candle. I personally don't like that. So like I said, I've become extremely picky, which by the way, I don't leverage this anymore, but I'm gonna start back leveraging it. So I actually have a chat to where cool. So I actually have a chat to where if any of you guys want to know what kind of DeLoreans I actually like to take, which like I said, it's few and far between now. Just because I have so many other setups I can have the opportunity to take. So look at this example, right? Look at how this EMA is actually cutting between both candles. That other one is kind of like slightly below this one. So this is kind of like the example I'm referencing, okay? So these are like the kind of DeLoreans that I like. So I literally created this chat. This was personally a chat I created for myself for back testing purposes so I can start training my eyes. But I started opening up to basically like the public. So as you guys can see, like it's a lot of examples in here. This is how you guys document your trades so you can get better. So one thing I recommend to you guys, if you don't, literally create a Telegram, right? Make it private. Don't add anybody to it. and then take screenshots of your setups and drop it in the chat. That's how you can start having, visually start training your eyes to recognize what kind of setups that you like. So I'm gonna go ahead and drop this in the chat for anybody that might already trade the DeLorean. It's not necessarily for new people. And if you want to be able to go look through that and kind of see what kind of DeLoreans I like to take, that could just be like something you guys could take advantage of. So like I said, I'm not crazy about any ones that were called out yet. So we can go ahead and dive into the market. Let's see. Okay. So we had a few different ideas that I ended up calling out yesterday, but I don't know why it's not showing the markups. But only one of them activated. So I ended up sending out GBP Chef as well. GBP Chef never actually activated, so I'm not gonna waste my time actually going over that setup. So as you guys can see, when I initially pulled out the fib, it ended up retracing. It didn't even quite make it to the 61% before it broke that low again. So obviously that's why I ended up saying delete it. I usually just keep my markups just in case the market does eventually come back. But like I said, I don't really care to break down setups that don't actually activate. So I'm gonna just leave that alone. NZD CAD, obviously this is probably not going to happen this week, but this might actually be a prime setup that might give us an opportunity to take a trade next week. But once again, I really don't like talking about setups that I haven't officially called out in the chat, because if they don't activate, it's kind of like I just spent a whole bunch of time explaining something that we don't even get a chance to get in. So I'm gonna just leave those there. And to be honest with you, really the only thing we're going to be talking about is GBP JPY. So I'm gonna scan the market real quick and see if there's anything. I was looking at AED CAD, but I'm personally gonna pass it up. Just for certain reasons. It's definitely not bad though. I feel like this is similar to the USD CAD trade we lost earlier this week, so that's why I'm personally gonna pass it up. So I'm gonna leave that alone. So I'm gonna scan this real quick, see if there's anything I like. I think some people be thinking, I don't know what y'all be thinking, but like I scan through the market really fast because I told y'all like I only use in 1 hour when I'm scanning the market. And I personally I know what I'm looking for. So what y'all are literally seeing me do is basically whenever I scan the market, like this is like I just know what I'm looking for. So it might look like I'm just like running through these fast. And it's like, bro, yes, I know what I'm looking for. Trust me. This is just how I scan the market. Like I know exactly what I want to see. And I could just kind of keep it pushing. Like literally what y'all are watching is how fast I'm able to scan through the market and see if there's anything that I like. Like no cap. Like exactly what I'm doing is what I do by myself with nobody watching me. And if I don't see what I want, I'm gonna just keep it pushing. That's why I said like it should not like whenever you get to a certain point, I'm not gonna say it should be like this fast, but you really should be able to kind of like scan through these setups and kind of be able to start identifying what it is exactly that you want to be able to see. Because me, I can go through all these pairs relatively quickly. What's that? That actually don't look bad. What's that? Euro JPY? Was that the 6 hour? Let's see. What this thing look like up in here. This might not actually be a bad play. I'll actually go ahead and throw that on the we'll come back to that. So I'll go ahead and throw that on the list. We'll dive deeper into that. So Euro JPY, what we got? Nope. Euro NZD, nope. Euro AUD, nope. Euro Chef, nope. And like I said, like everything don't work for everybody. Like I'm not the kind of person, I don't have to do all this for all these setups. I don't have to flip through different time frames. Like I back tested my ass off. So the 1 hour, I'm telling y'all, that is the only time frame I really need to kind of flip through. And then kind of when I flip through it, I can kind of dive a little bit deeper. But yeah, it's just basically because I know y'all have never seen me like live do this. So this is like when I'm scanning for setups, this is exactly what I'm doing. What is this? GBP Oh, this is a setup that we took earlier this week. Okay. That didn't activate. I mean, I don't like that. GBP CAD, nope. GBP JPY, we're already in that. USD JPY, that's just dropping. CHF JPY, NZD chef. Oh, I need to go ahead and make a YouTube video for this. This is a DeLorean that we actually took last week. That was dope. Let's see this. It's just like a nice little pullback opportunity. It's definitely not going to happen this week. That definitely could be a pullback to go higher, but that's not going to happen this week, I don't think. And I don't really see engulfing candle that I care for. Maybe something like that, but that's not going to happen this week. NZD CAD. Yeah, so I already said that. That's probably not going to happen this week. USD, so gold, USD chef, USD CAD. And basically we're done. Y'all see how fast it was? That was like 5 minutes. And that's how fast I'm able to scan the market. So all the setups that we literally talk about, I scan the market, I find it, and then that's what we talk about on the call. So that's why I said it really don't take me long to see what I'm looking for. So we'll come back to this because this actually doesn't look bad. So basically I would like this to, I already know what I want. I would like this to not violate this low and potentially give us some sort of retracement back up in here before maybe we have like that drop to break that structure. That actually does not look bad. Let me just kind of speed through this real quick. So we already got a deep enough retracement, 61.8. Yeah, that actually doesn't look bad. So we'll come back to that. Like I said, these are setups that are not going to happen this week, if anything. So we'll just focus on the setup. So GBP NZD. So obviously we called that earlier. What was that, like day before yesterday? So that ended up dropping for about 167 total pips. If anything, it's probably not probably. If anything, if it's going to continue lower, it's definitely, it would make sense for it to pull back into this gigantic imbalance up in here before it continues lower, if it's going to do that. But GBP JPY is what we're really going to be focusing on. Not too far away from TP2. Maybe it hits TP2 while we're on the call. That would be lit. That would be lit. That would be lit. All right, cool. All right, bet. So let's go ahead and break down GBP JPY one more time. So obviously, if you're on the call yesterday, be patient. I know I did break this down yesterday, but for anybody that was not on the call yesterday, I want to be able to break this down brand new so you can see why we took this trade and why it was so successful. So let me go ahead and pull up a different data feed so that I don't have to kind of like remark that up or like erase anything. I just want to leave that there. Excuse me. Oh, snap. We got Wall Street around the call. Shout out to my boy Wall Street. Let me get y'all to drop some C50s in the chat. Drop a CH50 in the chat. Come on, y'all. Don't be shy. We got a goddamn C50 on the call. Let me get y'all to drop C50 in the chat. Shout out my boy Wall Street Ray, right? One of the individuals who I learned a lot of my trading sauce from, okay? And I apply it, which is why my bank account profits from it. Shout out to my boy Wall Street Ray. I appreciate you, my brother, right? Make sure y'all tap into Wake Up with Wall Street in the morning, right? Shout out to my boy. All right, cool. So I'm gonna go ahead and pull up GBP JPY. So basically, like how I told you guys, the main thing I always want to be able to make you guys aware of is you have to figure out what works for you in the market. So I repeat time and time again. I know whenever y'all normally get on calls, my style of analyzing the market, I feel as though it's pretty, I don't even know what word to use. It's a little different, okay? Because, you know, most people, and this is not speaking down on, so don't take it as that, you know, most people 4-hour daily, I don't necessarily have to do that for what I've been able to train my eyes to see the market, which is why you guys hear me talk about all the time. The 1 hour is by far my favorite time frame, and that's really all I need, okay? So from the 1 hour, I say all the time, I'm looking for the first two things. It's going to be the overall trend of the market, right? And then I'm going to form a bias as far as, am I going to trade with the trend? Am I going to trade against the trend? So if we go back over to setup, I don't know if y'all remember, you know, we destroyed GBP JPY twice. So the first one was somewhere over here, right? This move over here, we had minimal drawdown. That was a 16 pip stop loss. I think that was about, I think it was like 120 pips or something like that, like 140, 120 pips, right? And then we ended up taking advantage of this move over here, which is actually what we're about to go over. So let me use the replay tool like that, because I love to be able to show you guys what the market looked like at the time that I was analyzing it, so you guys can kind of get like a more realistic feel. So this is what the market looked like at the time that I was looking at it. So I'm gonna bring it all the way back, right? So whenever I initially was looking for this original setup, which was this head and shoulders pattern, The bias that I had originally formed was that this was a downtrend, okay? Now I'm gonna tell you guys why, right? No, it was an uptrend. I'll take that back. So it was originally an uptrend. So this is actually a counter trend trade. So if you guys notice, right, this market ended up forming a high, okay? There's nothing really over here to the left, right? If I can go to a higher time frame just to kind of show you guys the example. So the reason why I said this is an uptrend is because if you guys notice, this market initially broke this structure level to the left, right? It gave a retracement. That retracement never came back to break this initial low, which started this aggressive impulse move, okay? So once again, this structure level was broken. The market gave a deep retracement that never broke the initial low that initiated the move. This is why this would have been considered an uptrend, okay? So if we go back to the 1 hour, right? What I was noticing was that I saw this aggressive fall off right here, okay? So if you look at this aggressive retracement, this is the most aggressive retracement within this entire uptrend, okay? Like there is nothing close to this move within this entire retracement. So that could mean, okay, the market might be getting ready to reverse. You know, I saw somewhat of like a liquidity sweep up here, right? So this is what I saw from a distance. So the way that my brain works is I was like, okay, what if I were to take the fib from the high to the low, right? Because in order to, you know, take a trade in any given direction, what I want to focus on is, have I gotten a deep enough retracement for it to make sense to even take the market in that direction? Okay, because think about it. If I just define that this is an uptrend, I don't want to just randomly jump in a counter trend trade because that's how you hurt yourself in the market. I want it to make sense. So the reason why it made sense is because we had the deepest level of retracement on the Fibonacci extension, which is going to be the 88%. Okay. So even though this is a valid uptrend, I could still just be looking for a retracement within the uptrend to take the continuation. I'm aware of that, okay? So now I've just explained to you guys the two initial confirmations. I've discovered the overall trend of the market, which is an uptrend, but in this specific scenario, I'm not trading with the trend. I'm technically trading against the trend, which is okay. But you need to know that you are trading against the trend because it's going to have a lot to do with how you use targets, where you enter, where you put your stop loss, how long you're going to hold the trade, okay? Because, you know, the market is probably going to pull back aggressively if you're trading against the trend. So now that I formed those two initial bias, now I can move forward, okay? So I don't really need any of this stuff to the left anymore. Once I form my bias, I'm really just focusing like right here at this point, to be honest with you. Once I form my bias, I'm really just going to focus on, you know, where the initial reactions happen. So without going into this area, we're going to act like this didn't happen, okay? Because we already took this trade. So I'm not going to just go back over this entire thing because this is not the current setup that we're speaking on. So what I ended up noticing was when we took this initial sell, the market pulled all the way back. Okay, so the market pulled back. This was our initial entry. So it came back, broke back above this area. Okay. But what didn't it do? It still did not violate this high that what initiated this initial bearish move. What does that mean? Once again, this could just simply be a retracement, right? Within the entire downtrend, okay? This is just simply a retracement. It doesn't mean that this is now just going to go up. It just means this is just a deeper retracement, which once again pulled back to an engulfing institutional candle, which is exactly at the 88%. Okay, so if I hover in, right, institutional candle, perfect reaction. It also lines up with what? The fib level, 88.6%. So I have a lot of confirmations going on right now, right? So all these things I'm interpreting, right? Because what I always tell people is it's not about being right or wrong. It's about building confidence. So all I want to do is I want to build confidence to make it make sense as to why I want to take the trade in the first place. So if I lose the trade, there are no regrets because I had a whole bunch of confirmations that had me confident enough to take the trade. And you just got to be okay with the results, however direction the market decides to go. So once again, the market did what? It broke a level of structure, right? So this is showing me that we have a downtrend. It pulled back. It did not break this initial high, and it retraced back to the deepest level of the fib. So This by definition is a pretty clean looking example that the market is showing us. Okay, this might very well be getting ready to drop again, right? Break of structure, deep retracement, doesn't violate the initial high that started the aggressive down move that initially, right? Same concept, break a structure, pullback, break a structure again. So the pullback, we want to see what? A break of structure again. You see how simple that is? That's literally all we want to see. Break of structure, pullback, break of structure, pullback, break of structure, pullback, another break of structure. Hopefully, if it comes down to this low, this is all we're looking at. So the market, what I like to be able to say is the market is going to give you footprints. It's going to give you hints. If you're not able to determine and you know what I'm saying, properly see the hints, then you're going to miss out on the move. So what the market is literally doing is literally saying, hey, it's kind of like nudging you, like, hey, yo, I'm not telling you that I'm about to fall out the sky, but I'm basically telling you I'm about to fall out the sky. So now the next thing is, okay, what other confirmations can I take advantage of? I'm glad that you asked. Now I can pull out the handy dandy RSI. Now you guys already know where I'm going with the RSI if you guys get on the call, okay? You guys know who Bay is. Bay is Divergence, okay? That's who Bay is, right? So the thing that I always tell people is I really want you guys to get familiar with the RSI because I feel like the RSI is not utilized enough. Why do I say that? The reason why I love the RSI so much is two reasons: divergence, and you can sense exhaustion in the market. What do I mean by that? Whenever you see this white line come outside of the purple box, right, that is going to be a strong indication that the market is, excuse me, getting exhausted in that given direction. So if we peek out of the purple box to the upside, that means the upside momentum is getting exhausted. So if you guys notice, if I take a vertical line and put it right here, right, this is how you're going to hurt yourself. So do not just randomly hop in for a sell when you see that the market comes outside the purple box, because guess what? It kept going higher. But what did the market start showing you? Okay. Initially, it showed us that we had some divergence right here, right? Which is why we had this very aggressive fall off, right? One of the best ways to be able to detect valid divergence is immediately after the divergent move has been confirmed, you have an aggressive impulse move in that given direction. So this confirmed that this was divergence, right? Once again, divergence is whenever you have your indicator going in one direction, which is down, you have your market going in another direction, which is up, okay? On top of that, we saw the exhaustion, right? The indication, the footprint that the market was leaving, saying, yo, Tyree, I'm running out of breath, bro. Like, tag me in, right? I'm running out of breath. I'm getting exhausted. All you got to do is be patient and wait for it to give you the sign. This impulsive move was the sign, which is why all we did was wait for the retracement to then get in for the initial sell. So if we're focusing over here, right, this is not any different, right? This is not any different. So what we're looking at now is we're going back to like simple support and resistance. So all you can literally do is you can literally do something like this, and you can see that the market is literally just simply reacting off of a resistance zone, okay? Once again, it did not peak outside of the purple box, but you can see how close the market came to the purple box, right? Which is showing you different levels of exhaustion. Look at all these areas of exhaustion that the market is constantly showing you. 1, 2, 3. Now, obviously, each one of these is at a different level. This one's the highest. This one is lower. This one peaked back up above. All three of these, all four of these are exhaustion. So these are all the footprints that the market is giving you, okay? Yeah, the market hasn't ultimately given us the drop that we really want, because I expect it to break this low eventually, okay? But this is showing us that it is coming, okay? So I don't need the indicator anymore. At this point, all the confirmations that I use in the market, I've literally shown you guys, right? Overall trend, what is my bias as far as the direction I'm gonna take the trade in, right? Do I have divergence? Do I see exhaustion? That's basically it. Those are literally my confirmations. Every single setup that I send out, those are the same confirmations I use. Overall trend, what direction am I going to take it in? I ain't even know that rhyme. Overall trend, what direction I'm going to take it in? Do I have divergence? Do I see exhaustion? All of those things line up. So once again, as I said, I noticed that the market came back up, hit this institutional candle, did not break above this initial high. And on top of that, we have one of the things that we like to see. Whenever the market gives you an aggressive, impulsive move, if there is an inefficiency or the market is moving a little too fast, there's going to be a void, or basically what I just said, an inefficiency that might be left behind. Once again, that is another footprint in the market, right? Now, this inefficiency or imbalance is going to be something that a lot of times you want to be able to see the market return to before it gives you that move. So this is how you guys can kind of like do what's called sit on your hands and wait to see what the market is going to do. If the market just kept dropping and it never gave you that pullback, it's not really too much you could do about that, because yes, that does happen in certain instances, right? Now, every imbalance is not the same, right? Think about if you would have tried to take this initial imbalance, right? The market would have clearly hit your stop loss. So you have to know that everything is relative, and you have to understand how to be able to use all these things in proper context, right? This imbalance was initiated because it reacted off of a very aggressive resistance area to the left, which is why the market ended up falling out of the sky aggressively, leaving this void. So in a nutshell, what you really want to be able to see in this instance is you like to be able to see some sort of retracement back into this inefficient zone before you get in to take this continuation, right? But I'm the kind of person that you guys know, I jokingly say I'm a lazy trader, right? Nothing against people that like trading off of zones. I don't have the patience to trade off of a zone. Why do I say that? If you're trading off of a zone, you have to wait for the market to first get to the zone, wait for the market to give you some sort of rejection. Some people take it off initial rejection. Some people need a doji candle or some type of candle formation. And all of that could take a lot of time, right? Depending on the time frame, depending on the time of day, you could be tired, you could be mad because you actually fell asleep, woke back up. It happened without you. I want to find an exact entry so that I can go to sleep comfortably, wake up, and I know that the market is going to put me in a trade regardless of if I'm looking at it or not. So what I'm about to show you guys is all of these confirmations are now going to conclude with me now looking for an entry in the market. How am I going to do that? It's going to be pretty simple. So the thing that I always tell everybody is the easiest thing I can identify is there's two different ways, right? With the trading style that I utilize that I obviously learned from, Bounce Back and Steady, which is smart money concepts. You can utilize an imbalance for an entry, or you can utilize an engulfing and or institutional candle. I personally learned a long time ago, I don't like entering off of imbalances. That's just me, okay? I feel like it's too tricky because, it can either be the opening of the imbalance, the close of the imbalance, the 50% of the imbalance. And I don't like the stop loss placement of imbalances, right? Anybody that knows what I'm speaking on, it's two different kind of people, right? It's going to be the person that's going to put his stop loss above this wick, or the person that's going to put his stop loss above this high. I don't like the fact that there's two different options, okay? I don't like that. If there's an engulfing candle, there's one option. It's just going to go above it for a bearish candle, below it for a bullish candle. There is no, what I'm saying? Because if you trade off of an imbalance for an entry, you a lot of times you're finagling the stop loss, and it might not even be a stop loss you're comfortable with, but you really don't want to mess up your risk to reward. So you kind of just go put a stop loss in an area that you just don't want to see. You hope that the market doesn't go past that area, but you're kind of guessing. I'm gonna be honest with you. So my entry candle is exclusively gonna be an engulfing candle, but I know within a higher time frame engulfing candle, a lot of times there's going to be an imbalance on the lower time frame. So from this 1 hour time frame, I'm gonna start working my way up to find the biggest engulfing candle on the highest time frame. So I'm gonna go to the 2 hour. What do I see initially on the 2 hour time frame? Exactly what I spoke about. I see an engulfing and or institutional candle right here. But remember what I told you guys, right? I want the biggest candle on the highest time frame. So I'm going to go to the 3 hour, right? So look, this is a really ugly one, and this is a good example. So I want you guys to know all engulfing candles are not the same. I prefer to stay away from the engulfing candles where, look at this wick. This wick, right, is bigger than the actual body of the candle. So that's not, I don't want to trade off of that. but I'm only on the 3 hour. Remember, I want to find the biggest one on the highest time frame. What happens if we go to the 4? That's what I'm talking about, okay? Now, like how my mama used to say, now we cooking with Crisco. You feel me? I personally don't cook with Crisco, but that's neither here nor there. So I don't need to go up any higher on any of the time frames because obviously this is the candle that we took our entry off of. So the 4 hour, right? Let me go back to the 2. Okay. Notice this box. This box is how big the 4 hour candle is. Notice how much space it leaves for the 2 hour. That means the 2 hour was not the biggest one on the highest time frame. So I'm not going to use that one. I'm going to use the 4 hour, right? Just so y'all can see, if I keep flipping, right, that's another engulfing candle, but this box shows that the 4 hour is still bigger. 6 hour, no candle. 7 hour, no candle. 8 hour, right? The 4 hour, even though the 8 hour is a higher time frame, the 4 hour is still technically a bigger candle, which is why I leave this box here. 9 hour, right? And I'm just showing you guys like how I confirm. So that's how you see. In conclusion, the 4 hour is by definition the biggest candle on the highest time frame. Now, it's not going to stop here because now we need to look for an entry, right? How do I look for an entry? The first thing that I personally do is, shout out to Starboy from Steady, I want to be able to look for the 50% just to start off, right? So what I'm going to do is I'm going to take, the custom fib, put on the 50% level. And what I'm going to do is I'm going to mark up that 50%, okay? Now, the thing I always explain to people, what I used to do is I used to just automatically take all of my entries exactly based off the 50%. There were no ifs, ands, or buts about it. But as I always speak on, back testing is the only way you're going to be able to perfect your craft and figure out what works for you, right? Now, Starboy, it's not even a thought. He's literally going to mark up every trade specifically off the 50%. If you get on any of the Steady sessions or get on Starboy sessions, there is no ifs, ands, or buts. He's never going to put it at the opening. He's always going to put it at the 50%. But guess what? Starboy is okay knowing that some of these setups might not make it to the 50% because he's going to set alerts. He might possibly get in if he notices that the market is rejecting before. I don't do all that, right? I don't want to have to, possibly try to get in if the market doesn't get to my exact entry. I just want the market to hit my entry. I was like, you know what? I was taking trades off the 50%, but I started noticing I'm missing a lot of setups, right? The market would come back into the candle, start rejecting somewhere up in here and just fall out the sky, right? And it just kept happening. It would be some ideas that I would get filled for. And obviously those would be the good ones because, the 50% is going to give you the best stop loss, right? Smallest stop loss, biggest risk to reward, biggest pip gain. But I don't like the fact that I was missing out on a lot of successful setups because, like I said, I don't like taking trades by market execution. That's just me, though, right? That's just me. If y'all follow my Telegram, I almost never send out a market execution, right? Everything is buy limit, sell limit. And I remember one time somebody told me, I don't know how successful of a trader you could be if you only take pennies. Well, I beg to differ. If you guys have seen the results, every trade is a pending order. Them joints activate. I'm going to just leave it at that, okay? The other thing I want to be aware of is, okay, I don't care as much about drawdown like other people. So I don't necessarily want to be in drawdown, but I would rather be in drawdown than to just miss the whole damn setup. I'm going to repeat that one more time for anybody that didn't hear me. I'm okay with being in drawdown as long as I get the setup. I don't want to get too cute with the entry. I don't want to get too cute with the stop loss. And I just miss the whole setup. You got people that mark up a chart and it's a 15-1, but if the trade don't activate, it don't matter that it's a 15-1. It's a 0-0 because you're not even in the trade. You feel me? So I was like, okay, throughout my back testing, one thing I want you guys to focus on, figure out what is your max stop loss. The biggest stop loss I feel comfortable using is 40 pips. Some people feel like that's too big. I don't care because that's what works for me. So that's why you need to figure out what is your max stop loss. If you don't know what your max stop loss is, it's going to be some scenarios that you're putting yourself in a trade that you feel uncomfortable because you don't really know what is your max. So you might be like, I normally do 20, but I'm going to take this 30 pip stop loss just because I feel like I got to. You're going to feel uncomfortable being in a trade because you haven't defined that my max stop loss is 20, so I shouldn't take a 30 pip stop loss, right? Hopefully I feel what I'm saying. So my max stop loss, start noticing moving forward, is 40 pips. You will never see a stop loss on any of my trades be bigger than 40 pips. But I came to that conclusion because I know I want to take a little more aggressive entry than the average smart money trader because I don't want to miss out on my setups. Okay. So the 50%, I'm not just going to automatically take a trade based off of that. So I was like, okay, Tyree, what way can you figure out how to still get in the trade? You're not forcing something. You're not being overly aggressive, but it's something that statistically is going to give you the highest opportunity to have every trade get filled, have every trade activate, right? Without you being like, oh man, it came a pip away and then went in my direction. So I was like, you know what? Let me start off by initially drawing an entry zone. So that entry zone that I've shown you guys time and time again on the call, and I'm really stretching all this just because, like I said, this is really the only setup. Euro JPY, I really don't even know if that's going to activate tonight. So I'm just really kind of like pushing this card kind of based off of this. But this is going to be my entry zone, okay? So from the opening of the candle to the 50% of the candle, this is specifically where I would like to see the rejection happen. We don't need to utilize the entire candle. We really need the 50% to the opening. Now, as I said, two kind of people. You can possibly wait for it to get into here, give you a rejection, sell by market. You can do that. I still want to find an exact entry so I can set a sell limit. So what is the next thing I'm going to do? Actually, let me go look at this picture real quick. Hold on. Hold up. Because I want to see before I go any further. All right, cool. So that was as deep as it went. All right, bet. So the next thing I'm going to do is I'm going to utilize the other fib, okay? I'm going to put y'all on some sauce, right? I learned this from, I actually learned this from an educator that's no longer on the platform named Mauricio. He used to, like I said, basically everything I'm showing you guys is like a combination of different educators I learned different styles from. Mauricio is one of the few traders I see that basically he used to literally take every entry based off of a fib level. So he was a smart money trader, right? He'd mark up his chart, do all this other stuff. He specifically used to basically only use the 71 and 78%. Like his entries were basically 71, 78% just based off of the setup. Mine is going to be similar, but what I like to do is once I draw my entry zone, I want to utilize a fib level that is in my entry zone to give me my exact entry. So notice the only fib level within this entry zone is the 61%. So you want to know where I'm going to put my entry? At the 61%, right? I know I'm dishing out a lot of information, but let me get you guys a drop of one in the chat if you guys are still with me and this is making sense so far, right? Let me get y'all to drop a one in the chat if y'all are still with me and this is making sense so far, right? I've literally broken this down from top to bottom so that you guys know exactly why I like the trade, why I took the trade, why I did what I did, why I entered where I entered, and so on and so forth, okay? Cool, so you guys are still with me. That's a bet, right? Appreciate it. So if I go back to the 1 hour, look at that, right? It's within that imbalance that I initially identified. So all of these things are now lining up, okay? So this is also extremely close to the 50%. It's not exactly there, but it's close to it. I like to just see where the 50% is. So relatively speaking, I know where my entry is, if it's close to it, if it's not close to it. I just like to know that information. So we now have our entry for this setup just like that. Now, the next thing we need to be able to determine is how are we going to determine our stop loss, right? So if I go ahead and put that short position tool, so I like to be able to round my stuff off. So that would be, now keep in mind, this is a different data feed. So this might not be to the exact pip of the actual setup that we took on GBP JPY, but just kind of keep that in mind, right? Because this is Owanda. Sometimes Owanda is a couple pips different than FXCM. So just kind of keep that in mind. So we have our entry, right? 157,350. Like I said, I like to round it off. That's just me. How am I going to place my stop loss, right? So whenever you trade, like I said, off of these institutional engulfing candles, it's very straightforward. You're always going to place your stop loss literally above the high of the highest wick of a bearish candle. If it's a bullish candle, you're going to place it below the lowest point of the wick. Now, the thing that I also noticed, not a lot of people apply, is they don't add spread to their stop loss. I'm gonna repeat that one more time. I noticed a lot of people, you just put the stop loss right at the wick. Stop doing that. I guarantee a few of you guys have gotten stopped out generically, even though the market didn't actually hit your stop loss. That's going to be because of spread, okay? So once again, from back testing, and also something I learned from another educator on the platform, shout out to the DeLorean staff. If you guys know about DeLoreans, they tell you that add spread times 2 to your stop loss. I'll repeat that one more time. If any of y'all trade DeLorean, whenever you do your stop loss, they said add spread times 2. Now, I don't add the times 2 just because personally for me, I kind of felt like I didn't need that much spread. So I just kind of got to the point to where it's like 2 pips of spread is perfect. I only personally trade Forex setup. So no matter what kind of pip count that Forex setup is, 2 pips of spread is basically going to be valid on every single one of these pairs. So when I get here, okay, I see that that's going to be about a 36.0 stop loss. Okay. So initially I can round that off, right? That would be 36 pips. Now I'm going to add 2 pips to it for the spread. That's how I get 38 pips. That is how I'm going to define my stop loss, right? Drop a 2 in the chat if that makes sense. So if you understand how I created my stop loss, let me get you guys to drop a 2 in the chat. Literally breaking down step by step exactly how I mark up a chart and, you know, how I'm validating the setup. All right. Bet. Okay. Now, the final step, guys, there's only basically one more step. The only other thing we need to do is we need to figure out our targets. And normally I don't even talk about targets on the call, but like I said, it's Friday. It's not a lot popping in the market. Let me actually go look at Euro JPY because we'll still mark this up. I'm just not going to take as much time to talk about that since we've been taking so much time on this one, but I do still think that that could be a good setup. Gosh darn. All right, bet. So now the next thing I want to do is I want to look for targets, right? So I always initially look for my first target to be at whatever low or high created the initial pullback. So if this is the lowest point before the market started retracing, this is always going to be my TP1. Okay. Generically, it's always going to be my TP1. TP2 and 3 and 4 is basically just going to be structure. So you guys just need to be able to properly identify structure levels. So this will be the next structure level. This will be another structure level. That's literally, that's it. Straightforward. Okay. Straightforward. Now I'm going to give you guys one more gem. Okay. I'm going to erase this and I'm going to now go back to the original setup. Notice how I have the Fibonacci tool to give me another take profit. So one thing I learned, I forget, once again, it's another educator that I would have learned this from. What I started realizing is, remember how I said, this is technically a bullish setup. We already identified this is an uptrend, right? So if we know that the market needs to give us a deep retracement to continue higher, what other, I don't even know how I'm trying to word it. It would make sense that if I were to take the fib from this low to the high, the market, right? It would make sense for the market to give us a pullback somewhere in this area, right? Before it continued to go higher. So I'm not technically looking for a buy when it gets down here, but I can utilize the information I just told you guys to look for a final target, which is why you guys see my final target is at the 61% fib level, which also does what? It also lines up with this imbalance up in here, okay? All of this information I'm telling you guys is everything that I'm utilizing to be able to build, as I said, confirmations, because it's no guarantee that once I took the trade, it was going to go in my favor. It could have hit stop loss. But if it would have hit stop loss, I couldn't have regretted anything. I couldn't have done anything differently because all of these are confirmations that I use time and time again, and they've proven more times than not to help me, okay? So all in all, guys, that's exactly why I took GBP JPY, right? That's how I found my targets. That's how I found my entry. That's how I found my stop loss. And as of right now, we're in deep profit. Yeah. So me personally, another thing too, the way that people adjust their stop losses to break even is different, right? To be honest, I feel like a lot of people, especially smart money traders, they just leave their entry all the way at the break even. Once I get in super deep profit, bro, I'm gonna be honest with you, I'm not trying to give all this money back to the market. So a lot of times I'm gonna start adjusting my stop loss to break even as I see additional structure levels get formed. So notice on this 1 hour time frame, we had another institutional candle that got formed. It was a pullback into this imbalance, and then the market kept dropping. So whenever take profit one got hit and I saw this, I was like, instead of just leaving my break even here, I'm now going to move it up a little bit closer, because if the market comes back and violates this area, it's definitely going to hit my break even. So at least I can cash in with a little bit of profit versus just a straight break even. Now, the reason why, if you guys saw the update, I moved my break even to take profit one is pretty simple. For me, once I get close to, like, look at how close, because yeah, this could technically pull all the way back, hit break even. This also could pull all the way back, maybe react off of this, and then continue to drop. I'm not really tripping on what could happen, and if I miss out, I'm not really that concerned about it, okay? Because like I said, I back tested enough to where I'm comfortable with anything that happens. Once I make my decision, I'm gonna just stand on it. So from what I noticed is, once I get the way that I set my take profits, once take profit two either gets hit or the market comes this close, more times than not, I'm really just going to go ahead and move my break even to the first take profit. Because like I said, I really don't want to give the market any money back. And as far as I'm concerned, if the market pulls all the way back to TP1, I'm okay with that. You know what I'm saying? I don't need to hold a trade forever. I don't need to have every profit get smashed. I don't need to have every target get hit. I just want to make money, and then I can keep it pushing. So this trade has already hit take profit one. I made money. It came close to take profit two. And at this point, if it pulls back and stops me out at take profit one, I'm just done with the trade. Okay. Y'all can do what y'all want to do. So for those of you that want to leave your stop loss or break even up here, you can do that. Okay. I'm not going to do that. I just am going to update y'all on what I'm doing. Right. So at this point, I have adjusted my new stop loss to take profit one. Okay. I'm going to tell you guys why. Right. I personally feel as though, yeah, the market could pull back, right? And maybe could come into this imbalance. But at the same time, we also have these structure levels over here. So hopefully this structure level holds. If not, then yeah, I'm okay with the market taking me out the trade. And then I'll just live to see another day with another setup. Okay. Now we're completely done with GBP JPY. We're going to go ahead and take it to Euro JPY, and then we're going to be done for tonight. Because I was late, so we now have officially been on here for an hour because I started this call. I think I got on at like 1:20 a.m. Central. We didn't really probably get started talking until like 1:30. So we've been on here almost an hour. So I'm gonna go ahead and mark this up, and then we'll go ahead and wrap it up. All right, cool. So let's go ahead and erase all this. I saw that 6 hour. That 6 hour. I really like the 6 hour candle, to be honest, which is just what really caught my attention right here. So let's go ahead and break this down so that we can, once again, form a bias. So 1 hour time frame. Okay. So let's see what we got. This looks like a bearish trend. Why? Initially, I can see that this structure over here to the left was broken, right? And as I already showed you guys, I took this fib from the high to the low, and we already got a deep enough retracement. So I really just need a retracement anywhere within 61.8 to the 88.6. Yeah, it would be nice if the retracement was all the way up here, but the market doesn't always give you what you want. Okay. So downtrend, because we have a break of a structure low. We also had a retracement with an aggressive reaction, right? Very aggressive reaction. On top of that, if we go look at the yen pairs, right? A lot of these yens are bearish as hell. USD JPY, bearish as hell. CHF JPY, bearish as hell. AD JPY, bearish as hell. NZD JPY, bearish as hell. CAD J, you get what I'm saying? So the other thing you guys want to utilize is look at the correlation. If all of the yens are bearish, this is giving me more confidence. I mean, and we're in another one, bearish as hell. So if all these yens are bearish as hell, okay, then that gives me a strong reason to believe this is also going to be what? Bearish as hell. Okay. So I now have seen the overall trend, which is bearish, and I form my opinion on the direction I want to take it, which is down. Let's move forward. Okay. So now we can hone in on this area up in here. So I basically already skipped the steps, so I don't have to really, flip through the time frames. We know that we're going to focus on the 6 hour time frame. Okay. We just know that. This is clearly the biggest candle in the highest time frame. If you guys want to validate it, let's start from the 1 hour and work our way up, right? 1 hour, 2 hour, 3 hour, right? So the 3 hours here, okay? 4 hour, 5 hour, 6 hour, right? We already defined that this is probably going to be the best one. 7 hour, too small, right? Look at all this space in the box. 8 hour, 9 hour, 10 hour, 11 hour, so on and so forth, right? This is also too small, right? So the 6 hour is clearly going to be, you know, the candle that we're going to look at, right? Once again, what do we notice? This initial high that initiated the impulsive move has not been broken, right? The market has already given a retracement and a reaction. Where? Let's see. So if I take the fib from the high to the low, the market has already given us a retracement to the deepest level of the fib, which is 61.8. Okay. If I were to probably look on lower time frames, we could probably see some other stuff. Yeah, so there's actually an imbalance up in here. Look at that. So on the 15-minute time frame, look at that. This is where the market actually reacted from. See that? Market is always going to leave you footprints. Look at that. Look at these reactions. It is not by coincidence. These wick rejections are happening right there within that 15-minute imbalance. So as I said, all I'm doing is building confidence as far as why I feel as though it's a good idea to take this trade in a direction. Okay. So we got all those confirmations and you guys literally know what comes next. I just broke it down in the last example. I'm about to break it down again. We're going to start off by looking at the 50% of this candle. Okay. Like so. So I'm going to start off by looking at the 50% of this candle. Bam. Just like that. Okay. 50% of that candle. The other thing too, we got our structure break over here. So just to show you guys the break of structure. So we got another break of structure, which is right here. It looks it's a lot easier to see on the lower time frame, right? So, right, we had the market build up liquidity here, broke structure, gave us a pullback. The pullback did not break this initial high. This for me is going to be a valid sell formation, okay? Just to get that out the way. Now, we got the 50% of that candle. What's the next thing that I'm going to do, right? I'm going to look for our entry zone, which is going to be from the 50% to the opening. What's the final thing I'm going to do? I'm then going to take our fib. And then keep in mind, this hasn't necessarily started giving us a deep retracement yet. So obviously, when I initially marked this up, if the market just keeps dropping, I'll have to, you know, what's the word, like revise it or whatever. But as of right now, we're just going to go off of based off the low that the market is currently showing us, which is at this wick, right? So I'm not going to actually send this out yet until I actually see the market starts actually retracing. And I know that this low is valid, but I'm just going to walk you guys through the same thing I just showed you guys. Because like I said, the other thing that I noticed is your success rate in the market is going to be based off of how similar each setup looks. If you guys start paying attention, all my setups are basically the exact same thing. If you're losing a lot or you're not consistent and you feel as though, man, each setup looks completely different, you want to start making sure your setups look more similar to each other. All my setups look extremely similar to each other, okay? So what did I tell you guys? My entry is going to be what? Based off of the fib levels within the entry zone. So I technically have two different levels I can look at, the 71%, right? And the 78%. Both of these could technically be valid entries. Now, once again, I told you guys, the 50% is not always going to be hit. The market is always not going to pull all the way back to the 50%. So what I like to do is I like to just take the entry, right? Based off the closest fib level to the opening. That's just me, right? Because as I told you guys, I've already defined that what? My maximum stop loss is 40 pips. So what we're about to check, right, is we're going to see if this entry is going to give us within that 40 pip range that I feel comfortable with. And if so, this is basically going to be the setup. So what am I going to do? Take it to this high. And it looks like it's going to give us within that 40 pip range. 31 pips, add 2 pips of spread, 33 pips. And ladies and gentlemen, here's my setup. Just like that, right? First take profit would be here, right? That'll be a 2-to-1. Second take profit, I ain't gonna even go into all that right now. Cause like I said, I still want to wait to see if this is actually gonna pull back, if this is even valid, or if it's just gonna keep dropping. So I don't want to just mark it up all the way, because I hate marking some up all the way just to erase it because it doesn't even actually activate. So I'll mark up the rest of those take profits, assuming that this market actually pulls back. But yeah, so this is literally another example in real time. You guys literally saw me find this from scanning the market, naked chart, right? I came back, I broke it down similar to how I just broke down the other setups, found my entry, found my stop loss. Now I just need the market to start giving me that retracement, right? We want to see that rejection and then a continuation. Drop a 1 in the chat if you guys, if all this is making sense, because like I said, this is basically me getting ready to wrap this up. Drop a 1 in the chat if this is making sense. Excuse me. Let me get y'all to drop a 1 in the chat if this is making sense for you guys. All right, but I'm gonna be honest with you guys. Now that I'm thinking about this, because one thing I'm thinking about now, since all of these yen pairs are bearish, I might not want to miss out on this move. So I'm gonna be honest. I usually don't do this, and moving forward, I might just be more strict with it. So I probably am gonna move my stop loss back above this area, because since I literally just, because before I moved my stop loss, I didn't actually do what I just did right now. I didn't actually look and see, damn, all these are dropping out of the sky. So I ain't gonna lie, I would be a little tight if it came back and hit our break even at TP1, never hit the original break even that I had set, and it ends up completing the setup and taking all of our targets. So yeah, I'm actually gonna do that. So I'm gonna go ahead and announce that on the call. I'm gonna go back and update that. Which I'm not gonna do moving forward, because I don't want to be that dude that starts confusing people, but I just want to make sure that we give ourselves a good opportunity to stay in the trade. So yeah, so I'm gonna go ahead and adjust that back. So if y'all are on the call and you actually took this position, I'm gonna put that back at 157. So I'm gonna go ahead and mark up my break even. I'll make that purple or something. So I'll make that 150. And I'll update this in the chat. So this is gonna be break even. Because yeah, like I said, now that I'm seeing all the yens are falling, I want to be able to actually see if we can stay in the setup versus me just talking about being good. Because this is still profit if it stops us out. So let me actually update this in the chats real quick. Give me a second. So and then like I said, moving forward, I'll just be more disciplined and just leave it there versus just pushing it up, just so I don't cause confusion and like backtracking, blah blah blah. So let me update that. So adjust SL to 157.1. What did I say? 50. Securing. How many pips is that? 19 pips. All right, let me go drop this in the other chat so everybody else is also able to take advantage of this information. Once again, sorry about that if I'm confusing anybody. I'll just make sure I don't I just leave it where I originally had it initially. Because like I said, I actually did not look at all the other yen pairs to see that everything is aggressively dropping. So I want to be able to actually stay in this position as long as possible to see if we can get the rest of those targets to be hit, because that would be pretty dope. Hit them with the Discord. I don't know. Switch device. I don't know, I guess. All right, let me put this over here. Go ahead and go to that Traders Lounge. All right, cool. Bam. Open that up. All right, cool. We're in the Traders Lounge. Where are the trade ideas? All right, cool. Where are the trade ideas? All right, cool. Trade ideas. Come on, slow ass computer. All right, but so reply. Paste. And then hit them with the sorry for confusion. All right, but like I said, I just want to be able to make sure we're putting ourselves in the best situation. So like I said, once again, I apologize for changing my mind a couple of times. I just make sure I don't do that anymore moving forward. All right, now I feel good about this. All right, cool. So Euro JPY. All right, cool. So now I feel really good. But like I said, I'm not gonna officially send this out now because like I said, I need to actually see that this area is gonna hold. Because if it just keeps dropping, I would just have to come back and say delete the trade I did. So I ain't trying to do all that. So I would just rather wait to call this out to see if it actually starts giving us that deep retracement. Because the London session technically just started 30 minutes ago. So there's a lot of I guess the market hasn't really started moving yet. It's just still stuck from the Asian session consolidation. That's why you see it's just been choppy. These past basically like 5 to 6 hours is like the Asian session. So hopefully within the next, 2-3 hours, we'll start to see the market showing us what direction it wants to start moving in. But yeah, I feel pretty good. Hold on. Let me see if there's any way we can maybe refine this. Because we could possibly the one thing I don't want to do is I don't want to be overly aggressive because like I said, risk to reward is cool, but I don't want to get stopped out of a trade just trying to worry about having, a super tight stop loss. And I ain't gonna lie. That 30-minute candle looks pretty good. I'm not going to lie. We might be able to refine this. I just gotta, let me see. Wait a minute now. Hold up, wait a minute. Let's see if we can put some refining up in it. I ain't gonna lie, that 30-minute candle looks pretty good. What that look like? Let's see. Damn, a 5. Oh my God. Lord Jesus. That could be absolutely disgusting. Yo. Hey, Wall Street, what you think about that, my brother? You think that's valid? Taking it off this 30-minute candle, what you think? Definitely give me your opinion. I think that 30-minute candle should be valid, bro. Because like I said, I'm not really tripping about having a bigger stop loss. But one thing I've also been working on is if I have the ability to refine the trade, I can do that. Huh. I ain't gonna lie. I like that, bro. I would actually move my entry up a little bit because that's a deep. If it is gonna react off this candle, it might not pull all the way back up there. I ain't gonna lie. I like this 30-minute candle, bro. We might just rock off with that 30-minute candle to keep it real with you. Let's see. I'm liking this 30-minute candle. Yeah, I'm gonna be honest with you. So that'd be about 15 pips. Oh, a 4.5 to 1 to the. Oh, I like that. I likes that. I like the way you do that right there, right there. Had to bring back out that early 2000 phone, y'all. Some of y'all not even old enough to know nothing about that. Yeah, I'm liking this. Yo, Ray. Hey, Ray, I'm gonna unmute you, bro. Let me get your opinion on this. I don't know if you're available, if you're busy. I'm asking you to unmute, so I don't know if you want to talk. Give me your opinion on this setup, bro. I don't know what you think. If you feel like talking, I don't know if you're busy. I don't know if you're free. I'd definitely like to hear what you got to say, though. Wall Street, where you at? Y'all type in the chat, Wall Street, where you at? Because he ain't saying nothing. Where you at, Wall Street? Don't tell me you fell asleep on the call. Type in the chat, Wall Street, where you at? Let me get y'all type in the chat, Wall Street, where you at? 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 My boy about to leave me hanging like a clothesline. Come on, bro. Where you at? Wall Street, where you at, brother? Don't tell me my boy Wall Street then fell asleep on the call. That's dedication right there. That's dedication right there. My boy go plug in by any minute. Yeah, I don't know what he must. He got to be busy because I know he hear me. All right, I don't think we're gonna be able to get the opinion from Wall Street. I just wanted a second opinion. I'm confident it's just there ain't nothing wrong with getting a second opinion from somebody you got respect for. But yeah, Wall Street, I don't think it's available, y'all. He's on the call, but I don't know what he got going on. Yeah, I'm gonna be honest, y'all. If this ends up actually giving us that pullback, we're gonna take it off that 30-minute candle. We're gonna take it off that 30-minute candle. I like that. And look, that's what I'm telling you guys, right? That's the other thing that you want to be able to be aware of too. I had to slow down to be able to find this because I was so adamant on, taking a bigger stop loss. But y'all saw what I was doing when I was like, hold on. I was like, wait a minute, hold on. I was like, wait a minute now. Yeah, I like this, y'all. I really like this right here. I'm gonna give you guys another example, right? GBP JPY. We took this off of the initial setup from over here. We took this off of a similar concept. So peep this, right? There's some sauce right here. Look at this. If you got, look, I'm gonna show you guys. Let me show you something real quick. Whenever I initially sent out the first GBP JPY, I had a bigger stop loss initially. Let me see if I can find that joint. So this is a setup that I called originally, but I don't know if I still got the other one on here. Yep, look at this. Look. Peep this, right? This is a good learning lesson. This is a similar concept to what I just happened, right? So I was content with the original setup I sent with this picture. This is a 40 pip stop loss, right? Then what happened was I was moving too fast, right? I was looking through the lower time frames and I ended up finding out that there was a 1 hour candle, which is why I came back. And then I marked it up like this with a 16 pip stop loss, right? So, oh, okay, yeah. So I said, look, updated entry and stop loss, please hurry up and update. It's close to entry. So I know it's a few people that didn't get a chance to put in this new one. That was my fault, which I'm glad I caught this one because like I said, I don't want to cause confusion. So I know some of y'all still had the 40 pip one and then I sent this one out and it took me, I didn't realize how long it took me to send this because look, I updated this at 5:11 and then I ended up taking 6 hours to say, hey, I updated it. So that's 100% my fault because I'm pretty sure, I don't know if y'all maybe thought I sent out 2 trades that were the same or whatever. So that's on me. But that's why I'm glad I caught this one. So I didn't have to send out Euro JPY to then backtrack and be like, wait a minute, change the parameters. So this is basically the same concept because the original stop loss was based off of, as you can see, this big ass 12-hour candle. But look, we ended up taking it off of this 1 hour candle, right? Which rejected perfectly. And we were able to reduce our risk, which is what gave us that grade. Look, peep this, right? Look at the difference in risk to reward, right? We went from a possible 2.5 to 1 to TP1, right? With a 40 pip stop to 3.5 to 1 to TP1, right? That's a big difference, right? That's a big difference. All that's extra bread in your pocket. And the overall setup, we got a 7.5 to 1, damn near 8 to 1, as you can see. Okay. So on this one, yeah, this looks like no, this is not even the I'm thinking of this as I'm talking, but yeah, so this right here, right off of this lower time frame candle, this is what we would like to see on Euro JPY based off of this 30-minute count. So yep, I done made up my mind. Wall Street Ray is either definitely asleep or just doing something else. So we're gonna go ahead and stick with this. So 30-minute. And like I said, the thing I'll be telling y'all is like you always are working on your craft. So think about it. Everything that I broke down on GBP JPY, initially, whenever I was looking at this, you're not always gonna have the ability to reduce your stop loss. So this was a 39 pip stop. If you guys look within this, there isn't really another candle that I could have reduce my stop loss off of, because all this is just imbalance. So what I'm saying is every setup, I'm not going to actually have the ability to reduce my stop loss. Like sometimes I just got to keep it at the bigger stop loss. But what I'm now realizing is there are going to be opportunities that present themselves that I used to ignore because I was just comfortable with the bigger stop loss. But now I'm like, okay, I know I'm not always going to have the ability to actually reduce my stop loss, but if I do have enough confidence to take it and just be okay with this. So this is one of those examples. It would have been, you know, a 30, I think it was a 33 pip stop loss originally. Now we got a 15 pip stop loss, right? So actually, right, let's take this fib and see what this will look like based off of this. And then we finna do the same thing. So we can actually move this up a little bit more. Bam, just like that. Let's see. Oh man, I love trading, bro. It's such an amazing thing. Yep, this looks like this is gonna hold. So hopefully this pushes up and I'll be sending this out. Now I'm gonna be honest with you guys. What y'all might want to do, right? I'm gonna keep it real. What I might do, I'm just gonna do this exclusively for the people that are still on the call. So for the people that hopped off or whatever, only because I want y'all to still benefit from it, because y'all got on the call, so y'all deserve this, right? I'm gonna mark this up. I'm just gonna give y'all take profit one though, because like I said, I'm personally not gonna put in all this effort to mark up all these other take profits if it never activates, but I'm gonna give you guys this setup. I want y'all to put this trade in because I'm gonna stay up, but obviously it's not a guarantee that y'all are gonna stay up. And it's impossible for me to say when I'm gonna send this out based off of, you know what I'm saying? So I would rather y'all put this in and wake up later today to see me say, delete this trade. Because what I'll basically drop in the chat, keep in mind, all y'all needs to be in my personal Telegram, because I'm only gonna send this update in my personal Telegram. I'm basically gonna say, if you're on my Zoom call and you put in that trade, delete it, because it never, you know what I'm saying? Because I never sent it out. So I'm gonna go ahead and drop this in here, right? So like I said, I would recommend y'all putting this trade. Worst case scenario, y'all are going to wake up in a few hours and just end up deleting it. But best case scenario, if I end up sending out the full trade and y'all are asleep, at least you don't miss out on it because you already put it in, right? And whenever you wake up, you can just add the additional take profit. But it looks like it's going to hold. But like I said, I'm not going to send it out officially yet, just because I hate sending out trades just to come back and say delete it. It's so annoying. So look, same concept, guys. So I'm actually going to go ahead and get rid of this. Now I'm going to leave that there. I like to be able to have that visual aspect, so I'm going to leave that there. And then look, right? This is the same thing. So now let's go back over everything once again. So look, entry zone, right? From opening. Hold on, I need to do the 50% on this. So let me actually, hold on. Man, I love trading, bro. This is like coke. This is like crack, bro. This is so fun. I don't know how this is not fun to people, bro. This is so fun. So let me move this over a little bit. Like that. Go back to that 30-minute. All right. Okay, get that 50%. All right, cool. And gonna get our entry zone, right? And then look at that. Within our entry zone, we only have, look at that, and it's the deepest retracement. Yeah, this definitely could be litty. I don't even talk like that. I don't even know why the hell I just said that. I apologize, y'all. I do not talk like that. Okay. All right, bet. This is looking pretty, it's looking pretty good. So we got a 12 pip stop now. Once again, let me make sure that this is good. So yeah, so that'll be 12 pips with 2 pips of spread. All right. Got the entry based off the fib level. Yep. I like that. Like it a lot. I like it a lot. I like it a lot. I like it a lot. Oh, it's almost a 6-to-1. Man, this thing about to be on and cracking. It is about to be on and cracking. Perfect. Let me set an alert. All right, I'm about to go ahead and mark this up, and then we're about to go ahead and get off the call because I'm basically I'm gonna be honest. I'm gonna just go ahead and mark up the whole thing and just give y'all all the parameters. Fuck it. Cause I might end up falling asleep my damn self. So I'm gonna just put it in with y'all. And then if I wake up, we'll wake up in the trade, or we'll wake up and delete the trade, either or. So let me go ahead and set this alert. I appreciate all y'all for rocking on the call. Y'all been extremely patient with me, and does not go unnoticed. So limit active. Look, this is something y'all need to do, bro. Please start setting trading alerts, because what happens is if I wake up late and the trade hit take profit and it starts pulling back, it's not my fault that I said take profit one got hit, but it got hit an hour ago. That's why you need to set your own alerts and monitor the trade. You should know when take profit gets hit, just like I should know, because I gave you the parameters. So go mark up your chart with the parameters. Stop being cheap. Pay $15 for the basic version of TradingView so you can get access to more trade alerts, because on the free version, you literally only get one. Look at these alerts. I literally have alerts for the take profits, bro. Like, come on. I don't know why I got two. But yeah, I literally got alerts for the take profits. I got alerts for the trades to activate. So this is what y'all need to be doing, right? So make sure y'all set alerts. Yeah, this looks like this is gonna hold. All right, so let's go ahead and mark up the rest of this. No, I'm not gonna do. I'm gonna just go still give y'all the first take profit, because like I said, I'm lazy, bro. I really don't feel like marking up this whole thing if this trade don't even activate. It just frustrates the hell out of me to put in all the effort just for the trade to not even activate. So I'm just gonna give y'all this, because honestly, if it just goes to take profit one, that's a whole damn trade right there. It don't even need to go no further, right? So yeah. So I'm gonna just give y'all this setup right here. So let me go ahead and mark this up, give y'all this, and then shit, y'all could be on your way. What we gonna make that? We're gonna make that 70. All right, cool. Right below that wick. Perfect. Perfect, perfect, perfect. All right, so we got a sell limit. Euro JPY. Like I said, this is exclusively for y'all as of right now. So definitely put this in before y'all go to sleep, because I know most of y'all probably finna go to sleep, which is valid because it's fucking 3 o'clock in the morning down here. I'm wide the fuck awake. I'm being honest. I'm about to eat. I'm starving. And I'm literally wide awake. I ain't even tired. So I'm gonna be up regardless. 131.080. SL 131.200. What was that? 12 pips. TP1. Oh, it's only one TPS right now, so I'm gonna just put TP. How many pips is that? 71. What's the R&R? 5.9. Okay. I could round it up to 6 to 1, but I ain't trying to do all that. We'll just keep it as is. 5.5 to round it off, so it's about 1 to 5.5. Risk to reward. Make that a little smaller. Save this and drop it in the chat for you guys. All right, so make sure y'all get that. If y'all want to, go ahead. I'll leave this on the screen for a couple minutes. Go ahead and take a screenshot. So I dropped the chart in the chat, so y'all can go to the chat, copy the link, paste it, on your notes on your iPhone, paste it in, your saved messages on Telegram, do something, or just go ahead and take a screenshot, right? So I'll leave this up here for like, 30 seconds. So make sure y'all go ahead and handle that. Because yeah, we basically gonna be getting off in like the next 5 minutes or so. I'm about to say like one more thing, and then we pretty much done for the night, because we done been on here damn near an hour and a half at this point. No, not technically, because I got on here like 30 minutes late. So we basically been on here like an hour and 10 minutes. All right, so yeah, so like I said, go ahead and get a screenshot, do what y'all got to do. So on and so forth. Okay, so y'all should have already done that. Let's go back and look at GJ. Let me see how this would have looked. Hold on. Because I don't think I used the fib on this one to get my entry. I think I just marked it off the opening. What would this have looked like? I'll be back testing my ass off, boy. Stop playing. Okay, that's why I did it. So I just went with the opening because the 88% didn't even get to the actual body of the candle. Okay, that makes sense. Makes sense. All right, guys, that's pretty much it. Look, if y'all came onto the call, you learned something, and on top of learning something, you had a good time. Let me get y'all to drop some ones in the chat, man. Let me get y'all to drop some ones in the chat. This is a great call, man. I learned some stuff, my damn self. I was talking a lot. I was probably I talked my own damn ears off, so I know I talked y'all ears off. Let me get y'all to drop a one in the chat if y'all came onto the call, had a good time, and you learned something. Not just one or the other, but both. Had a good time, and you learned something. Okay. Shout out to my boy Swank. Shout out to my boy Penitentiary Chat. I see my boy Skylar on the call. Right. Shout out to all y'all, right? Y'all put in some hours with your boy tonight. I know y'all probably tired as hell. Shout out to my girl Naya, you know what I'm saying? One of my great friends that gets on the call and always shows your boy support. It does not go unnoticed. So I appreciate you as well. And yeah, I hope all y'all become, you know, permanent regulars on this call because you see your boy providing value. So all right, shit. That's pretty much it, y'all. So, cause y'all know Tyree can talk his ass off, and eventually I begin to the point where I just be talking in a circle. So I'm about to go ahead and get off this call. Once again, the call was recorded. If you guys thoroughly like this call, guess what? It will be uploaded on the YouTube channel sometime later this morning, sometime later in the day. So you will have the ability to rewatch it. It will be dated January 14, 2022. But like I said, hopefully this holds. Because like I said, the reason why once again I'm not going to call out because this might just keep dropping, break this low, and at that point, the whole setup is, I mean, it's just gonna be invalidated. So, like I said, if y'all go to sleep, put this setup in. Worst case scenario, you guys are gonna wake up to a message that's gonna be something like this. Hey, in my Telegram chat, I'll be like, if you were on my Zoom call last night and you put in Euro JPY, go ahead and delete it. Okay, that's worst case scenario. But I would rather y'all put it in, and if y'all fall asleep and I send out the trade like at 5 o'clock in the morning, y'all are not awake. At least you already had the ability to put the trade in, which is why I'm giving it to you now. So with that being said, guys, that's it. It's been your boy official Tyree Samuels. The week is officially over. Once the market closes today, I'm going to give you guys the official results for all the trade ideas that we took for the week. So far, I can go ahead and show you guys what it looks like before I actually update it later. So as of right now, these are the results. No, wait. Yeah, here we go. These are the results. So from the beginning of the week until the end of the week, we took 4 trade ideas. The original GBP JPY maxed out at 126. This one is obviously, I haven't updated this. This is from when it hit take profit 1. So this one is like up 100 something pips. I haven't updated that. 3-1, 304 pips up until the time I update this. Maximum percentage gain could have been up to 13%. Also before I update this. And yeah, that's pretty much it. So I love you guys. I appreciate you guys. Don't do anything tonight in the market that I wouldn't do. And I'll see y'all next week at the same time, Monday, 1 a.m. Central, 2 a.m. Eastern. Peace.